world is changing fast. New technologies are impacting how we think about products, services, and the way we live our lives. Nowhere is this trend more present than in financial services, where new business models and customer expectations are changing our conceptions about banking, finance, and the very nature of money. Welcome to ReBank, a visionary podcast about banking, fintech, and the future. The future of banking is here. Hello and welcome to ReBank. I'm your host, Will Beeson. Oliver Prill is the CEO of Tide, a leading business banking provider for UK SMEs. Charles McManus is the CEO of ClearBank, the first new clearing bank in the UK for nearly 200 years. Tide and ClearBank recently won a £60 million grant as part of the RBS Remedies program, which we've mentioned before on the podcast and which Charles describes in detail to start us off. With the funding, Tide, backed by ClearBank, aims to achieve high single-digit market share in the UK SME banking market with its digital proposition. In this conversation, we discuss the two companies' plans, as well as the UK SME market in general. The first voice you'll hear in the conversation after mine is Charles's, followed by Oliver's. You'll hear us refer to the BCR, Banking Competition Remedies, the body responsible for administering the remedies program. In addition to the insights we deliver through our podcast and newsletter, ReBank offers advisory services to fintechs, banks, and corporates. Drawing on our experience starting, running, and advising fintech businesses, and our vast network of the most impactful fintech entrepreneurs, investors, and innovators around the world, we help companies make sense of fintech, work through specific questions, and optimize proposition and strategy. For more information about our services, please visit bankingthefuture.com. Thank you very much for joining us today. Please welcome Oliver Prill and Charles McManus. Oliver and Charles, welcome to ReBank.
Great to be here.
Very good morning to you.
Yeah, well, I appreciate your guys' time. It's great to connect. I've been very much looking forward to this conversation. As longtime listeners know, the SME, kind of small and medium enterprise business banking space is near and dear to my heart, having been involved in starting a bank in that space and having closely followed the RBS Remedies package. And you guys were, I guess, the winner of the £60 million grant from Pool A in a joint bid.
That's absolutely right. We were delighted. There were three awards in relation to Pool A. There's been subsequent pools since then. Each of the grants go down in size as you go through the pools, and essentially the largest grants were in Pool A. The total amount that RBS essentially was putting up in relation to the grants was 775 million. And that was spread across essentially the sort of innovation fund, but also the switching fund in relation to encouraging banks to take Williams & Glyn customers. If we go all the way back, this is EU law at its best, where RBS had to divest Williams & Glyn as part of the original ABN AMRO transaction once they put the RBS group together, and then, of course, then went through the financial crisis post that acquisition. And so RBS had gone through a number of attempts to essentially divest Williams & Glyn, but one of their biggest challenge was to actually disentangle the IT to allow Williams & Glyn to be sold off. And unfortunately, they spent an awful lot of money and time doing that, only to have to pull the project. And so the final remedy was that RBS actually had to put 775 million into the UK economy, essentially to stimulate competition in the SME market. And so the whole BCR fund was set up independently to administer that process. And out of that came the whole pool structure and application structure.
So Metrobank won the £120 million grant, which was the biggest grant in Pool A. Starling, a £100 million grant, which is the second biggest. And the Tide ClearBank proposition, the £60 million grant. Oliver, do you want to talk a bit about that joint Tide ClearBank
Yeah,
proposition?
absolutely. We'll be delighted. I think what's important to say, it's those 3 grants, and then also meaningful is the large Pool B grant for 50 million, which went to Nationwide. So essentially we got 4 strong challengers. And actually interesting thing, if you look at the competitive dynamics, as Charles was saying, we're talking about a market where historically the big 5, I mean, we always talk about the big 4, but frankly, Santander has many of the same characteristics. So the big 5 control 90% of this market. And, to put 2, if you want, digital players and 2 maybe more traditional challengers into the fray, certainly there's a lot of horses there to make sure that there will be impact on competition. Now, as far as we're concerned, as Charles was saying, we've been talking for a long time. I mean, ClearBank is, in our assessment, a fantastic infrastructure bank, leading edge technology, and it fits very neatly with our strategic fit, which is tied as a platform approach. So when we talk about business banking, as a shorthand, in reality, we see ourselves as a platform where a lot of the products or the product manufacturing, we actually work with, with leading partners. And so the current account is provided by ClearBank, and that fits very neatly with our platform strategy approach. Nothing designed for the BCR, it was just always there. And out of this combination, we sort of looked at, what can we do to achieve the BCR objective to actually break this oligopoly? Now, I think there are a couple of things to highlight. Firstly, there's already been an underlying, let's say, transformation. I mean, Tide's, very, very rapid growth preceded the BCR. And you could have probably say in the long run, the oligopoly would have been broken by digital transformation on its own. So the way we look at the grant is really as an opportunity to accelerate some of that. And that, I think, with all the, comments have been made, should be borne into perspective. This acceleration of transformation of the business banking sector has a huge economic benefit that probably way outweighs, the indirect taxpayers. Because when RBS pays, it's effectively taxpayers' money because the taxpayer owns most of it. But, it's probably a good amount of money to invest to make sure the economy transforms, more rapidly. So that's how we look at the grant. And if you look at it, we really see two core parts. One is we're accelerating marketing spend. So we would have gotten to, the 8% that we've committed ourselves to in the longer term anyway. And we're basically accelerating to basically break into over 8% within 5 years. Making Tide the largest business banking challenger after the big 5, and if the others deliver, clearly reducing the overall impact of the big 5. And the second sort of set is, and we can talk about that in more detail if you want to, is we're essentially using some of the grant money to accelerate the proposition, right? So actually what we're offering, because we all realize marketing is one thing, awareness, but in the end, marketing only works if you've got fantastic propositions. Tide has the leading base proposition in the market in place already, but there are loads of opportunities to expand, and the grant will allow that to happen.
Can you speak specifically? Can you specifically describe the bid that ClearBank and Tide put in? Because I understand that, so there's an independent body who was, I think, appointed by the Treasury maybe, and they were in charge of reviewing all the bids that came in and according to a set of criteria, selecting the winners. And I think in part the criteria were impact on the competitive dynamic of the market, capital commitment that the bidders were making. There are, I believe, legal obligations on winning bids to perform certain components of their bids, potentially deliver certain results.
So in essence, this was a highly structured process with, I think, lots of words being written in a very structured format. And I think, any illusion that, this was done, behind the scenes has sometimes been suggested, I think is far from the truth. It was a very, very rigorous process. Now, in terms of the dynamics, as far as our joint bid is concerned, effectively, we're matching the funds. So there was an ask of how much would you put in? So of the 60, we're upping that to 120. You're quite right in terms of the objective. It's essentially breaking open the market, right? So it's market share of the BCA, the business current account market, as the core metric. And around it, basically an explanation what you're going to do, which is sort of, what functionality you're going to do, what sort of marketing activity you're going to do to give comfort that that is achievable. Now, in terms of what makes our bid, I think, unique, in addition to it being, I think, a fantastic combination of two players with very strong strengths, within each part of the proposition, is that we actually offered a grant for results structure, which I think is very unique. So it wasn't asked for, we just put it. So we said, we don't want to consume the grant and then not deliver. So effectively what we said is for every % of market share we gain, we consume a proportion of the grant. And that had, I think, a whole set of has advantages. One is we put our money where our mouth is, right? So if we don't deliver, we don't consume the grant, we return it.
And it's like a stage gate type structure that you.
So for every percentage, we have that. And actually, for those critics around that fintech is not about governance, I think this thing has the tightest governance you can believe. So we've got Lord Lindsay as our independent chairman for this grant committee. We've got E&Y signing it off that the market share was truly achieved, and only then will the proportion be released. So there's very, very strong governance around it. And by the way, I'm saying this a little bit flippantly, but in reality, we have a lot of sympathy for that. I mean, this is effectively taxpayers' money. It should only be consumed for results. And I think we're all aware of big public sector projects that didn't deliver. And we're very keen, reputationally beyond anything else, that we deliver, right? So we will do that. And effectively for every so we pre-fund what we do. And then for every percentage market share, there's a proportion of the grant being released.
I totally take your point that this is part of a development that was potentially already in course. I think digital transformation was your word, driving a loosening of the grip of incumbent banks on this space over time. At the same time, this feels like a not once in a generation, once in a century type opportunity for new banks, challenger banks, to effectively secure rocket fuel for their own businesses in ways that potentially reshape the competitive dynamics among fintechs or medium-sized banks. Because there were some noteworthy parties, TSB, Clydesdale, Co-op, who didn't win grants. That potentially has medium to long-term impacts on their competitive positioning. Do you agree?
I think that's right, and I think we mentioned earlier we were surprised. If we were entirely honest, Oliver and I, obviously our respected boards, stakeholders, were trying to manage our own expectations as to whether we would win or not. And it was very interesting for us afterwards to look at the other commitments for the other two winners in Pool A that had commitments in relation to employment and in terms of location within the UK. There are other objectives there, commitments in relation to diversity, for example. What we did was focus very much in that obviously the Thai proposition is not a branch network traditional model in relation to servicing SMEs. And that was the strength. We focused very much on just the SME, not all of the other, if you like, political factors or locational factors or people, which we do anyway. I mean, to the extent of servicing the whole of the UK and indeed moving into Europe, etc. Focusing very much in relation to moving the needle in relation to UK SMEs. And that's why effectively we like Tide so much, because of all the players in the marketplace, that's where their focus actually is. And as we all know, this game, as came out over and over of people adding up the commitments, etc., the only way you're actually going to win in moving the needle is switching. So the growth in the UK SME market, whether it's going from 5.7 million to 6.1 million over the next few years, that isn't going to give you your market share. You have to win at switching. And Tide's analysis and analytics and actually prioritization of making sure they're delivering to SMEs to encourage them to switch, I felt was a very differentiating factor and has proved to be so in relation to the growth, even before we've got the rocket fuel, as you described earlier, of the success that Tide is already having in that space. So we wanted to back someone that wasn't traditional, that wasn't sort of branches, wasn't the old traditional sort of banking model. We talk about the digital transformation And I think we were pleasantly surprised to actually see that RBS and, if you like, the Cromwell setup and treasury influences or not, that they were brave enough to make digital new decisions rather than award them to the listed players that historically have been in the marketplace and more traditional offerings that you've referred to earlier.
Yeah. What do you say to the critics who say those three banks I mentioned before, TSB, Clydesdale, and Co-op, I think have something on the order of magnitude of maybe 7-8% market share. And I think the combination of the Metro bid, the Starling bid, and the Tide ClearBank bid is for 25% market share. So basically saying these existing players have, over the course of decades, managed to only amass a market share of 8%. What makes us think that these three challengers are going to amass 25% market share?
So clearly, I think we cannot speak for the other challengers. I think we can speak for, what we are in the race for. And I think there are a couple of sort of observations I would put towards that. Firstly, Tide, we're over 90,000, and let's say in due course we'll be 100,000. That's today.
Customers.
Today.
Members, absolutely.
Not accounts. And there's a lot of people inflate this by accounts. So there are many more accounts because businesses have multiple accounts. This is true member businesses. So what we call member SMEs. Just to put this into perspective, we've overtaken Co-op last month, and TSB and Metro have announced as part of this that they've got about 100,000. So I think the first notion is that it takes decades to build 100,000 SMEs doesn't apply, right? Tide has proven it's not future promise, it's now, right? So I think number one, that's there. Clydesdale is a little bit larger at a bit over 200,000, almost 300,000 SMEs. So that's in due course. But Tide will be the second largest business banking challenger by the end of this year. So that's, I think, number one. It's not distant future. Number two is I would challenge those that look at it and saying, there are public commitments out there, and you can calculate a wonderful ratio that we did, not for public consumption, but publicly calculatable, which is like, what is your promise of market share versus the amount of grant you're consuming? And there is, just like on marketing efficiency, some sort of question a marketeer has to ask, how much do I spend per customer? I think we can safely assume that this body also asks itself, so for this grant, what is my cost of switching an SME from, organization A, big bank, to organization B, a challenger that I back. And you can actually see that our proposition is the highest value for money. Last but not least, ours comes with an insurance policy. And I think this is where the key thing I would say to the critics is we will return the money. Now, I think the first milestone is not a million miles away, and I think we will hit it exactly as forecasted. So we're completely on track of doing that. But, should we at any stage fail, we'll return the money, which is very different because it was not part of the obligations to return the money to anyone else. Right? So I think those are the three things I would say. Last but not least, I think we have to realize that this was quite a comprehensive process. And I don't think it's helpful for the way we work, as an ecosystem to go in and to suggest that, in any way this was not run as a proper process. I think anyone that was involved, and presumably, these players have been involved as well, they had a very, very fair chance to put their case. And there was an independent body that took a judgment on it. And fair play means, when the judgment is made, you accept it. Right, rather than this was not a government or party political body, on the side making this decision. So, and that's what I would say to it. Last but not least, my final comment on it is, let's wait until we're 2023. As far as we're concerned, we will have definitely delivered by then. Whether everyone else will have delivered, of course, is a question.
Okay, so last burning question on this subject, and we'll change gears slightly. What was the general response, the market response, the media response to Metro Bank winning the biggest grant right around the time, I think actually right after they had uncovered, in quotation marks, this accounting issue, effectively being undercapitalized with respect to their assets?
So that's one aspect. So no doubt there are all three of us in the press have had various different challenges put at our door, if you like, in relation to The Metro one, certainly, and I understand in terms of banking, as you highlighted, is essentially what happened, which in any bank, on the basis of essentially calculating your capital adequacy calculation and missing out certain risk assets or getting the weightings of risk assets sort of incorrect and leading to a need for additional capital. Any CEO of any bank doesn't want to be in that position. So the way they handled the issue was very public in relation to their PR and all of that. Everyone can look back of how it should have been handled or wasn't handled and who disclosed first and whether the PRA found it or Metro found it themselves. In one sense, any bank that's been through a crisis will know that, it's very hard to manage an issue like that. That, as you say, was going on very much at the same time as the selection process. But I would come back really to what Oliver's just said. And I'm quite a sort of disciplinarian, as Lord Cromwell is, in terms of process. And actually, I talk about, in the way we approach the bid, answering exam questions. We were set very clear exam questions, and you have to answer the question. You get a number of restricted words. You had to go in front in terms of interviews. You had a set number of questions, and it was very, very disciplined what, how, and what you could say, so they could come up with their objective decision. So the aspect that Metro's application, irrespective of those issues internally into Metro, clearly stood up, and you can see from the commitments in relation to the SME space, very powerful proposition. And they obviously won that in their own right. I think the critics aspect have been saying, well, if you look at all of the other issues that are going on in that bank, should they have been worthy to actually receive the award? That was not for Lord Cromwell to determine. And there could have been political interference or other influences in relation to doing that. And the panel has stood up and stands behind, obviously, its evidence, if it had to, that it made the right decision irrespective of those factors. Now, fortunately, Metro have had a successful rights issue, have got over that and are building the business, and that may have been lost, but I don't think that was makes them ineligible in relation to the quality application they put in. And just to clear up the rest, obviously Starling had their challenges of Starling's CEO having previous relationships with potential board members and historic employment and relationships. Again, the press loves these things in terms of connections. But again, Starling's application would have had to have stood up to that. And Starling have been very clear that they disclosed all of that to the BCR as part of the process. So from their perspective, they felt they did nothing wrong. They disclosed up front in relation to all of that. And so from their perspective, again, have gone through the process that they should have done. It's interesting, really, the Thai ClearBank didn't pick up a lot. I think my honest view was there was some noise that essentially our application may not have been eligible and that Tide were not being a bank was not eligible. Well, actually, of course, Tide didn't make the application. ClearBank did, and we are fully eligible. And our innovative partnership in the relation, the way we put it all together, coming back to my discipline point, and in fact the governance aspects that Oliver's talked about, the reason I wanted such strong governance in relation to Lord Lindsay and the independence of actually release of the cash is being completely disciplined. And there's no question from my mind in relation to, so Tide on its own may not have been eligible, but that was an issue. In fact, Tide had raised themselves previously before this whole process started. That our application in that regard was actually done to the letter of the law, and we wouldn't have done it any other way.
Yeah. So switching gears a little bit, question for both of you guys. How much of the competitive positioning around what's called the ClearBank Tide partnership is a function of the technology that you guys have built versus other factors, and to the extent that technology plays an important part in that? Do you want to talk a little bit about the technology that you guys have both built? Tide,
from day one, had the vision of being a platform. So we do not believe fundamentally that the universal banking model, you are in all sectors and you try to build everything yourself, is fit for the future. And there are a couple of reasons why we believe that doesn't really work well. The first one is, even if you do this on modern technology, it's too big a space. It will consume enormous resources. And also remember, we live in a world of increasing and accelerating innovation. So trying to do everything yourself doesn't work. So Tide decided we do not really want to do what is traditionally called the product manufacturing. Really, we want to focus on the platform. Now, why do we want to focus on the platform? Firstly, we believe this platform, while we use a shorthand business banking, we actually think it's completely the wrong term, because a small business owner thinks of banking and admin. So it extends actually to payroll, accounting, all of these services. But basically, we sometimes characterize this as the operating system of an SME, not the application here. So we want to be the go-to place for a restaurateur, the IT consultant, the plumber, right, for their banking and admin. We never want to tell them how to run their business. And so as part of that, it's really about the platform, with that being the go-to place, basically, controlling the data, the payment flows, and most importantly, orchestrating the processes. The reason why that model works, and this is, I think, often when we speak, and I speak at conferences, speak with investors, something that people don't appreciate. Here, the dynamics are very different between consumer and small businesses. Where in consumer, we see increasing unbundling and proliferation of accounts. I mean, we all have our 10th Challenger Bank, consumer account, right? Because it's just another nice card in the thing. And, we all would shop around for any larger financial purchase, right? Whether we get a mortgage or anything like that. Small businesses are very different. The reason why they're different is that small businesses, so 5.5 out of the 5.7, don't have a formalized finance function. So the business owner or their admin person has a huge opportunity cost of doing banking and admin, right? Because basically takes away time from running their business or a little bit of free time. On average, they spend 48 days a year. And so the whole point Tide has is to provide this platform, this go-to place that saves you time. And that underpins the fundamental success. And we really believe we need to focus on this platform layer. And then we work with excellent product partners for the current account with ClearBank that can provide, if you want, the product layer and, product manufacturing layer. And I think I let Charles speak to that. But our diagnostic of product is the manufacturing side is there are a lot of scale economies. So it actually makes sense not to just do it yourself, but by actually leveraging a platform that sees a lot more volume go through it. By dedicated management teams in different organizations that just purely focus on that part of the manufacturing to make it as efficient and as innovative as possible. Effectively, with modern technology, if they are, as ClearBank is, with modern APIs, that's easily integratable into a seamless proposition.
So in terms of the current account, you said you work with ClearBank for that. Barclays used to provide that, right?
Yeah. So, but basically what happens is we used to be with an organization. As a matter of fact, some of the legacy accounts are still there with PPS, prepaid solution, and then now moving over to ClearBank. But if you want, that's the infrastructure layer. So if you go to the app, the way you use the account, the way your statements work, the way you do transactions, the way it integrates with your accounting, that's the platform layer.
Yeah.
Right?
In addition to the current account and the kind of the card that goes along with that, what other components of the platform are there? So
we think of the Tide platform as this is just for internal purposes, as 4 product verticals. So we have everything to do around payments. So in addition to, say, UK current account, we have international payments, that fits into the payment vertical. We have credit. And actually in credit, we have a beta running with Iwoka as a great provider. Just to give you an example of what a curated platform there looks like, effectively you press a button, we fire all the data across with, customer enters, the member enters 3 additional fields, gets an instant credit decision. The loan is paid out into the current account at Tide, and the Iwoka loan account appears in the app with all your repayments set up. So that's credit. And in credit, actually part of the proposition to the BCR will be to significantly build that out primarily through intermediation, right, with third parties. We then have business services. So business services, the third product vertical, is all the payroll, accounting, digital tax. That's the third. And then we have a fourth one, financial services, that deals with things like acquiring, again, part of the BCR proposition, savings and investment and insurance. So that's the platform, and it's all seamless. And the way to think about it, the reason why I said this is an internal way to look at it. Part of being a curated platform means that all of these things are ultra high usability. So let me give you an example. when we write an invoice, we will offer you the opportunity to factor that, right? So it's contextual finance. It's not like you go to another part of the app to do credit. It's all highly integrated and highly curated to basically allow the core objective, right, the core mission to be achieved, which is to save our members time.
Fantastic. Charles, that technology question.
ClearBank is all about technology in relation to where it started from, similar to Oliver. I mean, it's the most exciting from me in relation to sort of 32 years in investment banking around the world, and a stint at Ulster Bank writing off 10 billion of the RBS fund in relation to bad debts of Ulster and going through the RBS IT crisis. ClearBank was conceived on the idea of the existing service for clearing payments in the UK is all pretty legacy and the same level of service in relation to that architecture. And whilst there's been the new retail digital banks offering, as Oliver says, another card to a millennial in relation to the sort of 10th digital card that you want from a challenger, there's been no investment in essentially clearing banking in the UK. There were 16 clearing banks going back. Essentially, you got to 2014-15. There's really only 4 clearing banks left in the UK as full service. There's the Co-op and others that are partially in clearing payments. And so it was Nick Ogden, essentially, of the original idea of set up WorldPay and Cashflow, so was questioning himself in relation to why isn't there another clearing bank? And he had the original idea. I met Nick, and since then we've operationalized putting ClearBank into operation and getting a banking license. It's all founded on Microsoft Azure cloud-based technology. We built it all ourselves in terms of all of the code, so that, as Oliver says, in relation to an ISO 20022 API, you connect your payment to our API, and we are connected to all the payment schemes as well as the Bank of England, and we're trying to move to a position that, whether it's intraday liquidity management, whether it's automatic reconciliation, or it's actually transparency of where your payment is intraday in the 3 cycles of faster payment. A number of the others may batch faster payments, for example, so they're not instantaneous. Our whole objective is to use the Microsoft Azure technology to give our clients real-time payments. And so whether it's faster payments or it's BACS or it's CHAPS, or indeed there's the new innovations that are coming through for SMEs like request to pay, for example, we want to be leading edge in relation to taking out all the friction and, if you like, time in relation to that service. So whilst Tide can then offer all of those services at the front end in saving SMEs their time, in the payment functionality, rather than actually push your button on a payment, you don't know when it actually is settled. We want that settlement to be almost as close to the click on a faster payment as we can make possible. And so the end-to-end experience to SMEs or any of our other customers, that's what we're all about. Whereas actually in legacy IT, you cannot achieve any of those objectives. So a fundamental part of our proposition, which we're very proud of.
Yeah. Well, listeners should go back and check out the episode we did with Nick, as you mentioned, founder of WorldPay and ClearBank, inspiring guy. And that was probably almost years ago, but I think did a great job of describing the need for ClearBank and the proposition. You mentioned payments there as clearly very core to what you guys do. To what extent is payments the focus of ClearBank, and to what extent are you manufacturing, distributing other products?
Really great question. And another if you like, differentiator in relation to ClearBank. And again, echoing some of the things that Oliver said before, we have some fundamentals in ClearBank in relation to the proposition which we believe differentiate ourselves. So we provide clearing services to regulated financial institutions, which are e-money license, authorized payment institutions, credit unions, building societies, banks, bank-to-bank service. We do not do retail banking. We do not do business banking per se, and therefore we don't compete with our customers' customers. So from the perspective of Tide's customers, for example, yes, they have a direct bank account with ClearBank under the new proposition, but essentially we have a collaboration agreement between the two entities where essentially, those are Tide's customers, and we've outsourced some of our functions to Tide in interfacing with those customers in a true partnership rather than duplicate. And so we do not have any direct consumer or SME relationships, and therefore we can have very trusting, open conversations with our customers, because if one of the banks comes in with a new idea in terms of a retail product and needs faster payments or direct debits, or we can handle all of the back end in terms of manufacturing, I won't take that idea and potentially use it in my own retail banking division or others. And so our core strategy is only in relation to the payment space. And indeed, we're starting with sterling, we're moving on to euros and other currencies, and ultimately a payments platform. And indeed, like Oliver, at other conferences where other potential challenges or other banks are talking about various different business streams and open banking and running multiple business opportunities, interestingly, after those panel discussions, I've been complimented by a number of people who are saying, what we love about ClearBank is you are focused on trying to do one thing well, and you're not trying to do 10 different businesses. You're focused on one that you want to excel at, and that's exactly where we want to be.
Yeah. And is your focus UK only? Will that be pan-European at some point?
It will be, and we're going through we obviously had an interesting process educating the FCA and PRA through cloud and our journey in becoming a bank in the UK. We're now doing exactly the same with the Central Bank of Ireland and ECB. So we chose Dublin as our home for Europe, and CB Europe is already set up there. We're going through the process. And next year, hopefully, we will have the European bank up in terms of our regulatory licenses. And through the API, we'll then be able to offer essentially sterling and euro through the same API. And again, another differentiator that we have is coming back to your earlier question. All the cash of our customers is actually held in the central bank reserve accounts. We don't do any lending. We don't do anything in relation to our asset side of our balance sheet, our cash at central banks. So the euros will be held at the ECB. Sterling is held at the Bank of England. And so if all our customers actually wanted to empty their current accounts or their customers' current accounts with us at the same time, all of that cash is sitting at the Bank of England reserve account, including our share capital and reserves. ClearBank is not about credit risk or lending or NIM in terms of banking books. It's about transactional banking and delivering that service to essentially our regulated financial institution customers.
If we loop back over to the remedies piece and the grant you guys won, I get the sense, not least walking around the tube in London, that money to all winners has been dispersed and is being spent. There's some massive marketing campaigns up. I assume that means you're starting to see your bid and your expectations around that bid be validated by the market. What does early progress look like?
So maybe a couple of things. So I think the tube ads obviously had the effect of raising awareness with you and others, but I would actually not, in terms of spend, overrate, the investment in tube ads. I think there's been some great articles by a few journalists on it, some of them highly amusing. But I think, do the back of the envelope. It's actually not that big an investment. I think there's probably two things to say from our proposition's point of view. Number one is, if you look at the strength of the current proposition already and the flow market share, let me give you the following statistics that are very insightful. In November, the Tide brand had a prompted brand awareness with the relevant sets, so with SMEs, of 11%. At that stage, we were opening something like an estimated 5 to 6% of all new business current accounts in the country. We're now at 17%, and we open something like 12 to 14%. Why am I saying that? The fundamental reason for doing these sets of advertising or marketing is we already have a strong proposition. We will further strengthen it with the BCR money. However, the key thing is to raise awareness, because 17% still means 83% of SMEs have never heard of the Tide brand. And so it's essential. Now, the way we manage advertising is not, our Tide marketing teams. We don't believe in brand advertising. So anything you see gets allocated to CPA, cost per acquisition, and there are clear models of payback against that. And everything is tracked. So you can safely assume it's not just, there's a check that arrived in the bank, let's now buy a couple of tube ads. It's actually part of a very concerted effort where we optimize digital and we, in a very structured way, are testing off offline, so out of home, advertising. And by the way, a set of other offline channels to basically optimize the marketing mix.
Maybe to wrap up, I can ask you guys about your views, your gut feelings for the future of the competitive landscape in business banking in the UK as these pool grants start to flow through.
So this is how we look at the market. So if you think about it, there are, if you want, you can think of three things happening. Will there be a winner takes it all? Will there be a dominance of scale players? And will there be loads of niche players? Now, our view of the market is we will end up with a small number, maybe a handful, maybe slightly less, of scale players, each with somewhere between 10, 15, maybe up to 20%. Probably most of them, between 10 and 15. We'll have a rich set of niche players. So if the single percentage points, there will be no winner takes it all. Now, why are we taking this view? Number one is the notion that some people have, especially people that come from outside financial services, that there will be a winner takes it all, something like 70, 80%. I think we have with the BCR process, we can put pay to it, right? I mean, the government in something as sensitive as this will not accept the dominance of a single player, and quite rightly so. So we believe there will be, no one really holding beyond 15, 20% market share. There will be a set of scale players, which I'll come back to, and then niche players. The reason why I think there will be a rich set of niche players is that I think any healthy market, you will see people having very, very focused propositions. The problem with niches in small business banking is they're all very small. So let me give you a good example. If you are, as one of the big challenges is, very good at FX, you can maybe get in that subsegment, a great market share. Let's take the numbers. 11% of all SMEs engage in foreign trade. If you have a 20% market share of that, you have 2% overall. So we think there will be a lot of rich propositions on the niche side. And in the middle, there will be people that focus on SME and really get it right. These are the scale players. And that's what we aim to be at with the 8, 9, 10% that we will get in the long run. We want to be one of those scale players that caters for a rich set of diverse SMEs to do that. And we will think that that's how the market pans out.
Excellent. Oliver Prill and Charles McManus, thank you very much for joining us today.
Thank you for having us.
Our pleasure.
Thanks for tuning in to Rebank. If you like today's show, reach out. Follow us on Twitter at Rebank Podcast and join the conversation. For more on banking, fintech, and the future, check out our regular content at www.bankingthefuture.com.